Okay, I'd like to welcome you to the Polaris Trading Group's PTG University Educational Series. And today we will be reviewing our trades from the week of November 17th through the 21st, 2014. And we'll be using a 750 tick chart in the S&P E-mini futures. And the platform today will be Sierra chart. So before we get going, CFT Rule 4.41 simply states hypothetical simulated performance results have limitations, and trading in securities and options on futures have inherent risk, and past performance is not indicative of future results. So with that, let's go to the chart beginning on the 17th and review some of the trade setups we had throughout the course of the week. Okay, so we have a chart of the S&P E-mini 750 tick, and I'm going to just make some comments throughout this presentation here regarding various trade setups and how we could have traded them, whether or not you took the trades. The design here is to take a look back, review the trades that did occur, that were valid, and how we could trade these. Okay, so we'll start off the session here. This is the 17th, and we're going to be taking a look at day session trades only, nothing that happened during the Globex period. So the first trade opportunity we saw, let's just make an observation here to begin with. First off, as the day unfolded, we had an ATR bullish line shift here, okay, at this level. And once we get that, that tells us there is enough energy in price, in the underlying dynamics in price, all right, to break the value of the prior bearish ATR. So at this point, price turns into a bear stacker, or had already actually turned into a bear stacker prior to that in the overnight. So what we're looking to do is have an opportunity to buy a pullback. We have a bullish configuration in price. The price dynamics is telling us that price wants to go higher. So simply we're looking for pullbacks. Okay, and in terms of discounts, we want to be buying discounts in a strengthening condition. So the strengthening condition simply here is, all right, the underlying dynamics of the price structure is bullish. We have bullish momentum on our indicator. Right? Although I'm not showing the fair value ribbons in this particular review, I wanted to focus primarily on the price itself and the signals. But price structure here is bullish, so we want to be looking to buy pullback. So as you can see here, price did pull back, all right, gave us a signal, an alert that there was a discount forming. Okay, and simply what we want to do is we want to use the right side pivot rule. So once we have that alert formed, okay, now keep something in mind. Prior to that alert, as price is pulling back, you want to be referencing the oscillator down below. Once that fast CCI line gets below the minus 100 line, you know that there's going to be a hook back up above it, which will then alert us with a dot on the oscillator, as well as an alert bar with the arrow. Okay, so once that fast CCI line is below the minus 100, you want to be looking and preparing for an entry. How could you do that? All right, the right side pivot rule. It's formally known as the 2-bar high, 2-bar low entry method. And simply you want to be looking back a few bars and a couple bars and say, okay, approximately here, if price comes back up, or when price comes back up, all right, we want to be entering our trade. All right, so we get the alert bar, and then there's new momentum coming in, buyers are coming back in. That's when we want to buy it. So simply we want to place either a market order or use a buy stop to enter the trade. Stop goes below the low, and we work to get ourselves to a risk-free position. Okay. Secondarily, the price pulled back yet again, as you can see. All right. Now this time we didn't get a an alert on the price bar itself, but it is a discount, and so price pivoted back up, and then simply once again, all right, being very methodical about it. All right, the ATR line is still very much bullish. Using right side pivot rule, you'd probably be buying them a little bit above that pivot, those highs there, and then for a nice entry. Again, as you can see, the price ultimately carried a bit higher, and using our risk-free, exiting one contract and letting the second one develop, okay, is a great way to handle the trade. Okay, now as price peaked out, we saw price pull back yet again here, and offering a couple more opportunities on the buy side. This particular time, though, all right, price is pulling back, and it's pulling back a little deeper. And as you can see, that turbo discount, which is the cyan arrow, and the normal discount, which is the white, never triggered. Right, price never came really back up, and the lead line, which we use as a filter, again, that is not showing, but the lead line would be pointing down here. And so this is what we refer to as a discount in a weakening condition. Now, a discount in a weakening condition, guys, we don't want to be playing around too much about that, okay? So we would rather buy discounts in a strengthening condition. That's the criteria. Discounts in a weakening condition is caution. Not only that, we got an ATR shift. So once we got this ATR shift, all right, it was game off for the discounts, and it was game on for premiums. Okay, so as the day unfolded on the 17th, you could see here. Now what we would like to do is, once we get this ATR shift here, okay, we're looking for premium opportunities. Now the first premium could have been, all right, for aggressive traders, right here, that first pullback up into the ATR line. And again, how would you enter it? Same standard entry method, right side pivot rule, where the diamond is. Okay. Next opportunity came on another bounce, and this time gave us an alert, premium alert at 2050. And again, right side pivot rule, entry point here, stop goes above the high. Okay, and you can see in both of those cases that worked. Look at the next one now. This is a premium condition in a strengthening, right? Premium condition in a strengthening condition, right? That's caution, just as we saw in the discount. These are criteria that we use. Ultimately, what occurred then is yet another shift, and when we have a discount in a weakening condition, that will generally turn into a bear stacker, and we're looking for some sort of a pullback to enter there. Premiums in a strengthening condition will turn into a bull stacker, and as you can see here, what happened as well, the strength did come in, and there's a series of 200 extremes that signaled new strength, buying strength coming in to price. Okay, and then as the day unfolded here, price went into a trading range, and although there was some discount opportunities which were valid, never really carried. So there could have been a choice to take those or not. All right, in either case, you probably would not have lost anything on those, or probably would have scratched out. Okay, but those still would have been something to have considered. Let's take a look at the next trading. Okay, so here's the 18th, and as you can see here, the market in the day session took off pretty aggressively right on the opening. Okay, and again effectuated a bull shift. Now there wasn't really much in the way of opportunity to get on board that. There was really, as you can see, virtually no pullbacks. So all the way up here, all right, price was just, this was the breakout. Price was just kind of running away. So when it runs away like this, simply we're not going to chase it. All right, unless we can get some sort of a pullback, a turbo discount, something that we know that has a good probability to it. Price finally reached the peak, and again, as you can see here, these were discounts, but unfortunately for us in that particular case, these were discounts in a weakening condition, and we want to at least be cautious on taking those until the condition, until this pullback finally runs its course, okay, and then turns back up to the upside. Now, aggressive traders could have, again, on this last particular discount alert, okay, now we understand there was an ATR shift there, and it ultimately just turned out to be a brief one. But aggressive traders, then knowing that the momentum was fairly strong on the upside, finally when the momentum stopped to the downside and started coming back here, again, this could have been an aggressive trade, but still in alignment with the discount. And then ultimately it did reshift again. I think we spoke live about that. But for more conservative traders, what you'd want to do then is, again, there's plenty of opportunities here. So it's not, what we want to make sure we're in alignment with the underlying strength. So once this price action reshifted to a bullish condition, which was on the ATR shift, okay, momentum then, the early momentum, okay, as you can see, very much continued here. All right, very strong. Now, when you have strong momentum, you're going to have very shallow pullbacks, and that's where these turbo discounts come into play. All right, very, very shallow pullback. And again, the only way to get on board these, if you're going to play these, and again, we want to play these, we have a bullish condition, we got a bull stacker condition. You can see that green down on the histogram there, and the price is above the rising CCI and the bullish structure. We want to get on here. We don't want to hesitate. Okay, so we want to simply be buying using right side pivot rule, all right, to get on board. In many cases like this, we just simply need to use a market order. Okay, again, as the day unfolded, all right, again, another pullback followed by yet another turbo discount. Again, you use the right side pivot rule. Stay with what we know, all right? And you can see these multiple stars, which are telling us 200 extremes. This is telling us there's a lot of momentum to the upside. The buyers are very, very aggressive, all right? And that's what's causing the price movement to the upside with very shallow pullbacks, okay? All right, we'll check out the next day. Okay, so as we entered on the next day, the 19th, in the overnight, all right, price had shifted to a bearish condition here now. Okay, so now we're going to be looking for opportunities to sell on bounces or premiums. Okay, now although this wasn't the day session, I wanted to show you that, with the price bouncing back up to the ATR line, okay, this is a zone where you're going to be wanting to look for the premium shorts. At or around that ATR line is going to be an absolutely good level to take a look for premium. So again, that happened just prior to the opening, and then as the day unfolded, okay, on the 19th, you can see further movement to the downside followed by bounces. Now these bounces, again, these are premiums, and although you can see they were kind of moving higher, they didn't actually trigger, okay, until finally when these series of low bars got taken out, all right, and simply the execution would have been, again, right side pivot rule coming on the break of those low bars. Okay, so again, sometimes we don't get a perfect pivot structure. Sometimes it's kind of congested, but the fact remained here, trend was down. ATR line did continue to hold. Once price finally started to make the move down, okay, here, right side pivot rule, that is still the right side pivot rule, okay, and on the break of those low bars. Okay, this was on the 19th. And again, bounce again, further weakness, okay, right side pivot rule again. All right, stop goes above the high, and let the trade unfold. Work your way to get risk free. All right, and ultimately, price finally found its low and then bounced again. Now, in this particular case, we had a premium condition, but in this case, what did we have? We had a strengthening condition, all right, and this premium didn't trigger. Now this last premium here, this turbo probably would not have executed because it looked like, I remember the 38s was an important level, so we don't want to be selling that last premium down into a low. Price shifted. What did we get? Bull stacker. You can see the transition down here on the oscillator, okay, as well as the histogram. Okay, bull stacker. What do we want to do? We want to be looking to buy. Do we have to buy immediately? I would say, you know, here's just a hint for aggressive traders. Once we get an ATR shift, is it okay, you know, to buy, you know, up here like this aggressively? It is for aggressive traders. Most everybody is going to wait for an opportunity to buy some sort of a pullback. Okay, now if the momentum is aggressive, as it was here, you're not going to get much of a pullback, are we? Okay, but when we do get a pullback, it's going to be kind of, you know, fast and furious, as they say. And you know, again, identifying that turbo discount is giving us an alert. Okay, simply what you have to do when there's momentum is just simply buy it at the market. Again, right side pivot rule applies. All right, and I don't think anybody would have gotten this last one here at 20.45.50. I know I certainly didn't. That was around 2 o'clock, and there was an explosive move up there. So that was kind of a fast up and down move. All right, but you get the idea. We have discounts, okay, in strengthening conditions. All right, strengthening conditions. So we want to be aggressive to take discounts in strengthening. We want to be aggressive to take premiums, all right, in weakening conditions. We want to be cautious on premiums in strengthening conditions. Okay, that's the basis criteria here. And then there wasn't much here later in the day on the 19th. This was a bit choppy in here. May have, although again, we would have simply, the criteria would have been, we would have been looking for, you know, opportunities here on bounces since we did get an ATR shift. All right, but this ended up into the close settlement, and again, it was a little bit choppy on the remainder of that day. Moving right into the 20th here, okay, and we'll go right up into the opening bell, the 9:30. You could see right after the opening what happened. All right, right on the opening, there were some premium conditions, but there was strength. So again, once again, to reiterate, premiums in a strengthening condition we'll be cautious on. We'd have to wait for a weakening condition to realign itself. Premiums that don't trigger or do trigger and get stopped out, okay, generally will work into bull stackers. And you can see here down below on the histogram, okay, you can see the cyan color. That's transitioning into a bull stacker, and then ultimately into a full bull stacker. And then what do we want to be looking to do now? What's the structure? Price structure tells us that the ATR line is bullish. There is no shorting when you have an ATR line that is bullish, plain and simple. All right. And again, these were aggressive discounts here. That first one may not have gotten that. This one was a better one. It was a well-defined one here to our normal parameters. And again, there was still plenty of space to the upside. All right. Again, right side pivot rule. All right, buying above the high of those alert bars when the buyers come back. And as you can see in this particular case, this one, you know, went for a nice little journey up. Noontime on the 20th, backing and filling here, had a couple discounts that never really fully you know, played out. He ended up getting a shift. Okay, and so at that point, there's not really much to do on the long side unless we got a new bullish shift condition. Okay, and that's in fact what happened here. but it was late in the session. Okay, price pushed up, took out the ATR line. This was going in about into the closing bell, and then the pullback here offered a late discount again into settlement, right, and as well here. And then as we entered the last day on Friday, there was an explosive move to the upside in the overnight. And again, we're not going to consider the overnight trades because we don't trade it, but I just want to point out that discounts in a strengthening condition, once again, all right, we see these over and over again. We want to be aggressively playing those because the condition and momentum and strength is on our side. All right. Now, as we entered into the morning rotation on Friday, the 21st, all right, price had peaked out, and that was quite a rise there. All right. Now, these series of discounts, what was happening here? Just follow along, right? Weakening condition. Cautious on those discounts. All right. Once we got an ATR shift, all right, then we really should not be considering the long side any further. Okay. And then as you can see how it unfolded there on Friday, the remaining day was down. We had premium. We had another premium signal here, although we didn't get one on the bar. All right. We had another premium here. All right. And again, how are we going to trade these? Right side pivot, stop goes above the highs. All right, right side pivot, stop goes above the highs. Right side pivot, stop goes above the highs. Okay, repeat that to yourself. Right side pivot, stop goes above the highs. Okay, so there was a whole series of them here. Guys, let me just mention one thing. You do not need to get every single one of these trades. All right, don't feel the need or the pressure to say, oh, I missed that one, I have to get that one. I got another one, I missed that other one, I have to get this one, I have to get this one. Remember, what we're looking for is we're looking for quality trades. We're looking for, you know, good trades a day, but we need to remain in alignment, okay, with the underlying dynamics and price. The ATR line is going to help keep you in alignment, right, with the dynamics and price. Once we're in alignment, we know what to do. When the ATR line is bullish, we want to be looking to buy pullbacks, whether they're shallow pullbacks because the momentum is strong, or they're normal pullback discounts. Okay, we want to be looking to buy those in strengthening conditions. All right, we want to be cautious on discounts in a weakening condition at the end of a move. Typically, that happens. On the flip side, when there's a bear ATR, we want to be looking to get that first pullback. We want to be looking for premiums in a weakening condition, whether they're turbo premiums or normal premiums. We want to be aggressively taking those, okay? And just to finalize, premiums in a strengthening condition, those that typically occur at the end of a move or near an important level. We want to be cautious on those because there is a greater potential for those failing and then turning into a bull stacker shift. Okay, so there were numerous opportunities throughout the course of the week. I encourage you to review on your own, go back to the charts, see which ones, as I did here, and but you know, as a matter of fact, one great thing you can do is use the replay feature, right, which seemed to be underutilized. To use the replay feature, just go to a particular day that you want to review, such as Friday or any other day during the week, and then at the beginning of the day, and just go right click, and then just simply it says replay chart right here. Okay, by replaying the chart, and then you'll be able to choose the speed. Right, normally about 3, 4, 5 times the normal speed that trade takes place, and you'll be able to go through the entire week in about 15 minutes. Okay, so I hope this is helpful, and again, we want to stay in alignment with the underlying dynamics. All right, we want as many opportunities as we possibly can, and we want to aggressively attack each of these trade opportunities Okay, again, 1 or 2 trades a day, 2 to 3, 4 points a day. All right, and we make a very, very good living. Hope this helps everyone. We'll see everybody at the next educational series update. Good trading.